But you hit the nail on the head when you asked me the question. You said, is the United States an insolvent country? Insolvent nations tend to have a very bad relationship with a currency and a very bad relationship with gold. Gold is the true revealer of how well a nation is doing with its stability. And we're doing a very poor job of it. So I expect gold. Listen, if you ask me if Bitcoin, which is a 64 bit private key, which has letters and numbers in it that exists virtually. Uh, um, if that could be $60,000 a unit, then gold could be $5,000 or $6,000 an ounce. What always drives gold is falling nominal and real interest rates. That's what gold is most concerned of. And you see that the rates are falling. Rates have crashed. The long-term rates have crashed. So gold actually absolutely loves that. I think the next leg is a recession. That'll take rates a little bit lower on the long end, a lot lower on the short end, because I think the Fed funds rate could go to 2%. Right now, the 2-year note is over 4. So that's wonderful. But you hit the nail on the head when you asked me the question. You said, is the United States an insolvent country? Insolvent nations tend to have a very bad relationship with a currency and a very bad relationship with gold. Gold is the true revealer of how well a nation is doing with its stability. And we're doing a very poor job of it. So I expect gold. Listen, if you ask me if Bitcoin, which is a 64 bit private key, which has letters and numbers in it that exists virtually, if that could be $60,000 a unit, then gold could be $5,000 or $6,000 an ounce.
According to Michael Pento, you need to understand where we are in terms of inflation and growth. He talks about 5 different sectors: deflation, disinflation, stasis, reflation, and stagflation or hyperinflation. Each of these sectors has its own investment strategy. Sometimes the environment is great for gold, and sometimes it's not. For instance, Pento says gold hates reflation because interest rates are rising and the economy is doing well. He mentions that in Sector 4, you could face significant losses, but in Sectors 2 and 1, gold could perform really well because it thrives on falling nominal and real interest rates. Even in Sector 5, Pento believes gold could do exceptionally well, especially if real rates despite nominal rates rising end up lagging behind inflation. In his view, that scenario would be ideal for gold.
The empty money supply. So it's domestic money supply. So
That's
you
all
have
I'm
swap agreements, but then we exchange dollars and they give us money. But $6 trillion is the number that I'm focused on. It's never happened before. We have never had a $6 trillion. And by the way, from 1913 to 2007, the Fed's balance sheet. So this is the creation of the Federal Reserve from 1913 to 2000 and the end of 2007. It was $800 billion. That was high-powered money. This is the reserves in the banking system. This is part of the base money supply, which is, so it's Fed credit plus physical coins and currency in circulation, $800 billion. And from 2008 to 2022, so 14 years, it went from $800 billion to $9 trillion. And that's Banana Republic style, man. That's just disgusting. And you think about the $6 trillion in helicopter money that was handed out, $5 trillion of that, like I said, was printed. It's just nonsense how we've financialized our economy. And there's a price to be paid. The price to be paid was inflation and the destruction of the middle class. That price has already been paid for, or it's being paid for right now. Kai, we have to prosecute that fight. We have to vanquish inflation, in my opinion, to get back to some kind of normalcy. And it will entail an asset bubble crash. I think the U.S. dollar, and I'm not just talking about so much against other flawed fiat currencies, because that's not how you measure a currency. You measure a currency against gold. You want to look at a chart, put up the Japanese yen against gold up until a few weeks ago. I think the dollar crashes against the price of gold. Crashes. It's been doing so, and I think that could accelerate after the recession.
Michael Pento has been saying that if he's right and the Fed and Treasury panic, declaring that the money markets are frozen, with no commercial paper floating, no transactions in the repo market, and everything becoming dysfunctional. Then they might have to roll out zero-interest rate policies, and even helicopter money again. In such a scenario, he believes the dollar could crash, especially against hard assets. He's pointed out that other nations have already realized they can't safely park their currency reserves in US dollars because of the risk of confiscation. Instead, they're likely to use their trade surpluses to buy gold rather than dollars and treasuries, which could be hit by tariffs. By holding gold themselves, they avoid the risk of US sanctions. Pento has been saying this for years, and now he sees it as a fact, not just a theory. It's happening right now.